Hey guys, Mike here. So another interesting day in the market and very volatile as usual. A lot of data, dumped today. That's where you saw all this volatility come from. Might have noticed the 10-year pumped while you were sleeping. I will show you why that happened. I actually had warned about this. I guess it was maybe Friday, Saturday video, whatever it was, that this is going to continue to happen. You're going to see these moves being made as this stuff comes out. But also, we'll get into, because remember the market's closed tomorrow, a Friday, major data coming out. Once again, pre-market, and so you will see it react off that. But more importantly, what is the market doing here? Well, we had FOMC minutes come in as well, and I'll show you exactly what they're trying to price it now and get used to. But I will start off this right here, and also I'm going to talk about quantum computing stocks if somebody asked me to talk about those, so we'll look at that because they got a major haircut there, and I will show you why. But when you look at this, I mean, this is just sad, man. One of my members sent me this. He lives out in LA, and my heart goes out to all these folks because a lot of them have lost everything. I mean, look at that. It looks like a freaking war zone over the hill over there. And, somebody actually posted a video. They drove through part of LA. And again, I live in Florida, so I don't live out here. But this gentleman right here posted this is specific Palisades, I guess, is what is left of it. And you can just see, I mean, oh, man, I just hate to see this. It's just sad, man. If you live out there, I hope you're safe. I hope you got out and everything. But just to watch people lose everything, that is beyond devastating. Trust me, I live in Florida. We go through hurricanes. So I know somebody every hurricane season, multiple people that just lose everything. And it's just sad. And the buildings can be rebuilt, but all the pictures, the memories, all that stuff, it's just tough. So my heart goes out to you. I hope everything works out. So again, if you're out there and you watch these videos, let us know in the comments how you're doing, if you're able to get out, and hopefully, your house was safe. But that area just got devastated. I saw the winds were just unbelievable out there, pushing around. So again, my heart goes out to you. You'll be in my prayers, okay? Now, going into the market, you can see 10-year yield does what? Boom, spikes up while I'm asleep, and it's that trend line, those two trend lines right there. I put these in like a couple of days ago, and it keeps hitting these marks. But you can see right here in the morning news brief what happened really early. U.S. stock futures slip on Wednesday as investors absorbed a report that President-elect Donald Trump is considering declaring a national economic emergency to pave the way for proposed tariffs. Meanwhile, the 10-year Treasury yield jumped to around 4.72% to hold near 8-month highs. Trump is looking for the emergency powers to provide a legal basis for his proposed hefty and wide-range tariffs. The news jolted markets already on guard for Trump's economic surprises as an inauguration day nears, bracing for a wave of policy moves and executive orders. Investors are keeping a close eye on prospects for the economy as they gauge shifts in the chances of slower interest rate cuts this year. And we'll talk about that when we hit the minutes in just a minute. But of course, you go back, and then the news comes out at 8:15, and the jobs data was less than what was expected, so the 10-year yield retreats. Came in 122K for jobs data versus 139K versus 146K before. And you can see, what do you see with manufacturing data? Shed another 11,000 jobs. Where's the stuff coming from, though? Where's the jobs being added? Healthcare, once again, it just leads the way, and then education. But manufacturing, see you later. You can see on the bottom, I mean, it's not like it's some huge drop off over the last, I guess, year and a half, whatever it is. Then we had initial jobless claims and continuous jobless claims come out. You can see initial was lower than expected. And then, of course, continuing right here popped up a little bit. And normally you see initial when it gets between, I think it's like, I don't know, 240, 250 somewhere. If it hangs in there for a long time and continues to go up, that's when they get really worried about this. But you can see it's been trending down. When it hit 240, it's been trending down ever since June of 2024. And so that is the initial ones. And so then, of course, rates kind of started coming back up again. When you look at it, it just looks like this thing, again, those two trend lines I showed you yesterday, the ascending trend line that keeps holding that as support. But every time I put in some kind of resistance or support up top, whatever it is, it just keeps hitting them. It's hitting them quickly. And, I mean, is it on its way to 5? That's what we're going to find out. And if it goes that high, I mean, that creates a lot of problems, okay? Because remember, you're seeing what? The mortgage rates go back up. The 10-year, this is the lending rates. This will create a problem when people are trying to raise capital, people trying to buy houses, all that stuff, right? The credit card rates, everything. And so that's what everybody's looking at. The market's kind of like, oof. So the bond market's telling us, one, to take on this debt, they want more to buy these bonds, which you saw yesterday in the 10-year bond auction was higher than the one before that, right? There's 5 up there, by the way. And I'll move one of these lines from down here to up here. So these are the kind of marks you'll hit. And not, I mean, hopefully don't go straight up. You see it kind of comes up, retracts. I mean, just like any other stock chart. But you can see right here, Nikki leaks here when they put out the Fed minutes, recent higher than expected readings on inflation and the effects of potential changes in trade and immigration policy suggest that the process of bringing inflation to target could take longer than previously estimated. And of course, when we go through this, we'll talk about all in just a minute, you can see as I just go through this, it's like a 5% chance this month they think they're going to cut rates. 5% chance. This can all change, right? March, you can see they still really aren't expecting a rate cut. 60% chance it doesn't happen. May, which is pretty far away, 47. You get to June where it's like overwhelmingly, oh yeah, they're going to cut rates, which of course, I mean, everything can change by then. We got to see what's going to happen with policies and everything. And that's why it's important to understand this just uncertainty. That's what the market's going through right now. That's why it's doing what it's doing. Because one, you're going to see XLE's been going up, right? Healthcare starting to get some rotation into it. I'm putting a members video out today about this, right? And looking at it. And, the uncertainty of what are they going to do? Because they say they're going to do this. They might do this. They might not do any of it. Okay. You might get in the office and they say, hey, if you do all this, stock market's going to go down. And they might say, never mind, we're good. Okay. But they also don't understand about immigration, right? What are they going to do in immigration? Because, I mean, let's be honest about it. Who's out in those fields picking all that food? You tell me who's doing it. Who's working in all these restaurants? All these different jobs. Who's working in the meat packing plants and stuff? I mean, that's what we got to see. I mean, if it's executed, and I mean, how is it going to affect the labor market? You kind of got a glimpse of how it would affect it in 2020, right? Because people from illegal, they were going home because there was no jobs to be had. We shut down the world. And then when we opened back up, we said, where's all the labor force at? What's going on here? I saw grandmothers going to work at McDonald's at that point in time. They were so desperate to hire people, and so again, that's what we got to see. And the market's trying to figure that out. Doesn't mean the market ain't going to go up. It just doesn't. Right, but we just got to wait to see, okay? Because we know, we've seen this market many times. We know they can start running this thing up into the inauguration, use that as a sell news event. We know they can run this market down until inauguration and then start moving. Again, it goes up 70% of the freaking time, okay? We just got to say, go level by level is key as we look at this right here, okay? Let me know what you think down the bottom about all that. And you can see we can't get above this one. We got to get above 592 right there to even start talking about more upside. But this gap right here, we put in here yesterday, it filled, all right? On the hourly, it filled, so we're going to take this off. Don't have to worry about that anymore. I'm going to show you something in extended trading hours, to me, that makes the chart look even smoother, and you kind of see what's going on, because you're getting a lot of moves, at night when we're sleeping here. And so, again, this is a higher low on an hourly chart. When you look at it like that, is it trying to turn something bigger? That's what we'll have to see. But when you go out to the daily, I mean, you can clearly see that is a downtrend. That's just what this is, okay? And I don't think there's any arguing that right there. But when you look over here at the extended trading hours, this to me looks much smoother, because a lot of this is dropping in pre-market and it's not showing up on regular trading hours, right? Because that's not supposed to. But when you look at this, you can clearly see it's just basically wedging this in, right? You see lower highs, but you see higher lows happening here. So we'll draw a trend line, as you can see right here. So we could still come down and touch this right here. That trend line, if it comes down right there, absolutely it can happen, okay? And so that could happen. We're below the 50. But you can see, to me, this is a lot smoother to look at. I'm going to extend this trend line right here out so you can see it, and then kind of zoom in a little bit more. And so we could literally just stay in this wedge until the inauguration. It's not that far off. That could happen, okay? So, again, when you look at it this way, you're kind of going, well, I guess that's not really so much a downtrend as it is. We're just, basically wedging this triangle pattern. And the market wants to see what's going to happen. If we start breaking these levels to the downside, obviously it opens up the election day gap, of course. Okay. IWM, what I tell you yesterday, I said this shaded area, if it comes down in here, look for it to get a bounce. That's exactly what happened. Came down here, boom, bounced again. It might be the 9th, 10th, 12th time. I've lost count how many times this thing has bounced now. But that's what's happening. But it still can't get above the anchor VWAP. We kept this trend line in place right here. So I say you always keep that trend line in place when it breaks, because it will be resistance most of the time. And that's what happened. That's where it got rejected when it started running up this morning. That's where it got rejected at, and just kind of stayed red the rest of the day. But once again, if you are new here, it's very simple. You got to get above 226.79, but that shade area continues to hold. So we are just in a range. What are we in a range for? Because of the stupid 10-year yield. That's what we're in a range for. It's putting a lot of pressure. And when it gets over 4% especially, then it really puts a lot of pressure on IWM. It's an inverse relationship pretty much, as you can see by this chart right here. And so that thing's been running IWM is just sitting in this holding pattern after it went down. It's still holding the shade area. So if we start getting weaker economic data and the 10-year yield starts to come down, or inflation data continues to come down, let's say Trump doesn't do like major tariffs, he just does like targeted tariffs, things like that, and then they're not worried about inflation anymore and all this fun stuff, and he comes up with a plan to deal with the debt, then you can see the 10-year drop off a cliff, and all of a sudden here comes risk on. Okay, now speaking of risk on, you saw the man right here with all the power, CEO Jensen here from NVIDIA, snap his fingers just like Thanos from the Marvel movie, and all of a sudden make quantum market caps disappear. I mean, all he said was this: if you said 15 years for very useful quantum computers, that would probably be on the early side. If you said 30, it's probably on the late side. But if you pick 20, I think a whole bunch of us would believe it. And when he said that last night, boy, they took a dip. And trust me, these numbers to the right, these are much better than they were. They're almost down 50% today. You saw people buying these things up at the bottom here. I mean, you saw that was 20% move. That was nothing, right? QBTS or one of these two, like a 40% off its bottom right there. That almost come into the gap. Yeah, look at that. They started buying this thing at 463, ran it up 45% to 673. And then you see all of them though. But these have been up huge. Okay, all these are spec stocks. That's just the way it is. Some of them have income. Some of them really don't have any income to speak of. And so when he said that, like, oh my goodness. And of course, when stocks are up like these are up, which I'll show you a few in just a second, then yes, there's going to be a major drop. And some people woke up, and I hate it, when they woke up and they're like, oh my God, the position's down 50%. But I will say, I mean, you see the run up here. I mean, this one right here is down 69% in 20 days. What was that, QUBT? But then when you look, it's still up from the run up. Look at that. I mean, that is crazy. These run up, I'm talking about 900,000% in less than like a month and a half, which is just nuts when you think about it. But that's what happens to spec stocks, right? And all of these, or three of the four I'm going to show you, trade on the Russell. This is when the Russell was really, starting to go. People are like, oh, we're going to break. And then that did not happen. And when these all started cooling off, the Russell really started cooling off. But you see RGTI, this thing went up 918% in 47 days. You would think people would take profit, right? And when we go over here, these can run up because not like there are these huge floats to them or anything like that. And they're on the Russell, right? And they have been just doing nothing. And then most of them were highly, highly shorted, right? So you look over at these, most of them have, 100 to 200 million market cap, anywhere shorted from, 12 to 25%. Again, this one's not on the Russell. I think the other three actually are on the Russell. When we scroll over here to RGTI, we'll just go through all these real quick. You can see 215 million shares in the float, about 17% short interest. I don't know how often they update this, by the way. On the Russell 2000, you can. I don't use this for income or anything. I'm sure you can feel free. Like I said, some of these have income, some of them don't. QBTS, D-Wave Quantum Computing. 120 million float. What was that, like 28% short the float or whatever? And then the last one, IONQ. And I'm sure there's other stocks that are in this sector, by the way. Another one here, 17% short float, 186 million shares, trades on the Russell as well. And so again, these are, are they the future? Probably. I mean, it'd be nice if they were, but they're like anything else. I mean, they're speculative stocks. So these can have huge moves that you've seen, and they can have huge drops. And I can't think of the name of the guy on Twitter, but I mean, he's all up into these kind of stocks, and he's just really good at it. But even he was like, a few days ago, he's like, I'm taking profit, and people were bagging on him. But now he's like going, see, because one tweet can do it, one bad day in the market. Because if the market gets risk off, which you've seen these already dropping before today, they were already dropping before, but, and at some point in time, it definitely will come risk off at some point in time this year. Then, these are going to get the biggest hit for sure. All of them will, your RKs, that kind of stuff. But, it's up to you what you want to do. Do I think they're the future? Of course they're the future, But remember how many times did we get talk about, what was it, gene editing? Back in, 2018, 2019, all those years. Gene editing is the future. And it should be, right? But our government won't allow it to be the future, because then you wouldn't have to pay for a hip replacement or something, or pay for cancer treatments, and they don't want that, because that's where the money is made at in healthcare. We're a for-profit system. Government's never going to allow that kind of stuff to happen, unfortunately, because they're bought off by the healthcare, like pharmaceutical industries and the medical device industry. But sure, one question I would pose to you guys is, man, if quantum computing comes into place and supposedly, I mean, it obviously can solve a problem faster than, any other, whatever the other kind of computers were, especially people. Like, do we need us anymore? I mean, honestly, if the computer can do it, I mean, like, what do we need it for? I guess in the way I'm kind of looking at all this AI thing and where it's going to go in the next 20 years. I'm still having a problem figuring out where we fit in at, right? I don't, and I always go back to what Elon Musk said. He's like, yeah, the government's going to have to come up with a universal paycheck because people are going to be replaced. And and again, I know it upsets people when I say this, but I just look back. I'm not trying to create conflict. I'm really trying to have a discussion here, because I was having this discussion on New Year's, drinking, having fun with guys, but it's what guys talk about. We got done talking about football, so we started switching over to this. And I asked people, I said, we're talking about AI and it's going to do this, that, and the other. I said, I think it'll do great things. But I'm still having a problem figuring out where we fit in, because when you look at technology that's going through, most of it, like the internet created, it opened up so many different sectors, right? And people talk about the tractor. Yeah, but the tractor, look at where we were in our economy. We were babies at that point in time. The economy was a baby when they invented the tractor, right? The internet comes out, that just opens up the world to us, right? The global economy, so to speak. But AI, or even automation, let's say it's automation, all that's done so far that I've seen is replace people. Look at any car manufacturing plant. Look at toll booths, right? It used to be people sitting there taking money. Not anymore. Look at ATMs. How many tellers banks got now? And for those who are young, like, banks used to have a lot more tellers. Okay, they used to have a lot more physical locations as well. But there's no need for that anymore. You can look at China, for example, right? They automated all of their ports, and the only people in there are the ones going this. There'll be a room, bunch of little kids going, Neek. But those workers are gone, right? And they're automating like crazy. Why? This proves to me that AI is supposed to replace people. The reason why China is automating so fast when anybody else is not even worried about it, because why? They did the one-child policy. Their population is a mess, right? Way more older people, and now their workforce has shrunk down here, and they got all these jobs they need to fill. Automation. And so I'm still just trying to struggle and going, where in the world, like autonomous taxis? I went out to California. We took Waymo. We didn't take no Ubers. I asked the Uber driver. I probably shouldn't ask him. I think he got very upset. It's a sensitive subject. I said, you guys got Waymos out here, right? He said, yeah. I said, well, how does that affect you guys? I don't get as many fares anymore. Well, no crap. You know what I'm saying? That's how it works. Just because you put more autonomous taxis out there, it don't mean there's more riders to be had, right? It's just more competition for the same amount of riders. And so, that's just my 2 cents on it. I still don't get it, but maybe I'm missing something, because I am tech stupid, I'll be honest with you. So anyway, don't forget the market is closed tomorrow. We reopen on Friday. I'll put a video out tomorrow night talking about, what data to expect. We do have one big earnings coming out, but then we'll set up for the banks next week, which really kicks off the earnings and stuff. So we'll see how we go. We'll see if the economic data comes in hotter or weaker, whatever, and again, that'll affect the yields, and that's going to determine where the market's going to go. So anyway, I hope you guys got something out of it. Please let me know your feedback on everything I just said, and I'll see you guys tomorrow.